This is the Asia Trade. I'm Paul Allen in Sydney, where markets have just opened.
I'm Haidi, Stroud-Watts. The top stories this hour. Nvidia shares are slipping in late trade as its revenue forecast fails to meet the highest expectations, a sign that the AI frenzy may be running ahead of reality.
Bitcoin in striking distance of $100,000 as MicroStrategy leads a buying frenzy, and the Trump team considers a crypto policy office in the White House.
And New York prosecutors indict Indian billionaire Gautam Adani on bribery charges, accusing him of hiding illegal payments from US investors.
Well, let's start with Nvidia revenue forecast failing to meet the highest expectations, suggesting that its dizzying AI-fueled growth run does have its limits. For more on this, let's bring in Sarah Fryer, who leads our big tech coverage. Sarah, the earnings call still underway. What are some of the key highlights we've heard so far?
I mean, to be clear, Nvidia is still very much at the top of the world of fulfilling the demand for AI accelerator chips. They are really the only company that can do what they do. The thing is, the demand is exceeding their ability to produce things as fast as they'd like to. They have said that their Blackwell chip is the next line of chips that are coming, will be in full production very soon, but for a few quarters they may not be able to send them out as fast as people want them. So really it's a problem of the physical limitations of how quickly you can roll these things out to market. Not anything wrong with the demand and the future for AI here.
They've only missed estimates on a quarterly revenue basis once over the past 5 years. Does this speak more to just how lofty these expectations are? As you say, it seems like once Blackwell was sort of, full steam ahead, that we could see quite easily a recovery, if you even want to sort of characterize it like that.
I mean, to be clear, they haven't missed estimates in this case either. They just missed the top end of the range of estimates, and it was just a little bit of a beat, not a full beat from the average. So I think what we're looking at here is a company that people expect just dramatic growth from, a company that has already had dramatic growth that needs to continue to sustain that in order to meet this insatiable appetite for its continued share gain, for its continued revenue gain, doubling of its business. It's really I think not a miss here as much as it's a company that was expected to completely hit it out of the park.
Yeah, expectations always do seem to outrun reality with this stock, but also outrunning things is demand really massively outstripping supply here. So when it comes to producing these Blackwell chips at scale, how long is it going to be before everyone who wants one walks away satisfied?
Well, Jen-Hsun Wang said that there is a return to production satisfying the needs within just a few quarters. In the meantime, there is still demand for their current line. So they're very much making the case that they're acting as fast as they can to get these to customers. In meantime, there really isn't anyone else on the market catching up with them. So unfortunately, people who want these chips will have to wait for them. And it might give some competitors a little bit of a chance, but it takes a long time to make a chip that can hit the market and have a big impact. I mean, these things take years to plan. So Nvidia is still ahead of the game here.
Is there any concern about customer base concentration at all? Because we have also heard from Amazon, from Meta, from Microsoft, the big customers, that they're really committed to still ramping up AI spending.
There's a little bit of concern that a lot of Nvidia's customer base is just these cloud providers. It's a big chunk of their business. And what investors would like to see is a little bit more diversification, showing that there is appetite for AI and demand across all industries, across governments and broadly. And I think that's what the CEO did try to make clear in his statement today, is that there is broad appetite for AI, not just in the tech world.
Sarah Fire, who leads the big tech coverage here at Bloomberg with the latest on Nvidia. Of course, that's going to be sort of thematically front and centre when it comes to the start of trading in Asia, particularly as we get those chip and AI and tech-heavy names coming online in the next hour or so. But take a look at how we're trading at the moment when it comes to US futures. S&P futures looking quite flat at the moment. We are setting up for early declines in this part of the world as well. Pretty muted mood on Wall Street. And as Sarah pointed out, even as the numbers continue to be objectively pretty staggering and robust, that amplification of the muted mood was due to Nvidia's, seen as perhaps not as much as a beat on the highest end as perhaps these lofty expectations had been established to want to see. We're seeing Treasury yields there rising, the dollar also rising, Bitcoin, as Paul mentioned, setting that fresh record. Also watching crude as well, where imports rising despite exports rebounding. That was a takeaway from the latest EIA report.
Well, we've been trading here in Australia for just coming up on 6 minutes now, and we're seeing a little bit of optimism in the early going, but it is always hard to get a read on things at these early stages. One stock we're watching that hasn't started trading yet is Resolute Mining, the gold miner. We have heard that the country of Mali has now released the CEO, Terry Holohan, and 2 other executives who are detained there. AFP is citing a judicial source there. Seems that they've come to some sort of agreement relating to that $160 million claim that Mali had against Resolute. Haidi.
Let's get back to one of our top corporate stories. New York prosecutors have indicted Indian billionaire Gautam Adani on bribery charges. They're accusing the Adani Group chief and other executives of hiding illegal payments from US investors. Let's get more from Bloomberg's legal enterprise reporter, Patricia Hurtado. And Patricia, we have done some reporting in terms of what this investigation entailed before. So perhaps walk us through the case and what's being alleged here.
Well, what's alleged is a domestic fraud case where bribes were paid in India, and it basically to influence a business in the United States. So a majority of the fraud took place in India, but the United States government says that because there were securities dealt in the U.S. markets, that's how the U.S. government gets this ability to prosecute this case. It's quite unusual, and it might be the first of its kind.
So where did this alleged crime take place?
Well, it took place in India and the United States, if you believe the government's allegations. It alleges that bribes were paid to Indian government officials to finance lucrative contracts. And then later on, another group of individuals working in the scheme allegedly paid bribes to basically help promote the business in the United States. So that promoting of business and the paying bribes in the United States, as well as lying to U.S. investigators who questioned them about it. There's some evidence that was supposedly doctored, and it's an allegation of obstruction of justice from the U.S. Gives them the U.S. government a leg into this case.
What's the scale that we're looking at here in terms of what is thought was paid in these bribes?
$250 million was paid allegedly to get the business, and they allege the business made at least billions of dollars for Adani and the Adani Group. Many of his other businesses were also impacted. The SEC filed a related complaint in the case saying Adani Green identified one of the companies that was used that benefited was Adani Green, as well as Azure Group. It's a sprawling case in a way, if you'd like to think about it. We're in Brooklyn, New York, and that this allegation goes all the way to India. It's unclear. None of them are in custody as well. So it's unclear if they'd ever face justice in the United States.
All right, so with no one in custody, what's the plan here? What happens next?
Well, I guess the U.S. government believes that they've got to prosecute a case, right? If they find criminal wrongdoing that they believe should be pursued, they're going to pursue it. We're wondering why now. And it could be that, the U.S. attorney that's currently in the charge, his name is Breon Peace, he was appointed under President Biden, who's leaving office, and all the U.S. attorneys have to basically give a resignation letter to the incoming president, who's Donald Trump. whether Donald Trump would want to pursue this kind of case or tell his Justice Department to drop it. I guess the thinking is, let's make the case now, announce it, and it can't be undone. The indictment can't be undone.
All right, Bloomberg's legal enterprise reporter Patricia Hurtado there. Well, President-elect Donald Trump's team is said to be holding discussions about whether to create a new White House post dedicated to cryptocurrency policy. Now, that's helped drive further gains in Bitcoin. Now it's up about 40% since Trump's election win. Let's get more from Bloomberg's political news director, Jody Schneider. So, Jody, how would this White House crypto roll work?
Well, that's the real question, Paul. We've just heard about it today that the President-elect Trump is looking at creating this. He, of course, had made his support of Bitcoin part of his campaign for president this summer, going to a Bitcoin conference, meeting with crypto executives, and really embracing this. So now we are hearing that he will have a cryptocurrency position in the White House. Now, the question is, would it just be a White House advisory type role or more what they call czar? The czar positions tend to be somebody who really brings together all the different parts of the agencies and Congress and the White House, really putting all that together in a position that would report perhaps directly to the president's chief of staff or, you know, through the West Wing of the White House. So that's something the industry wants and is lobbying for. And apparently they're sending lots of names over to the White House of who they'd like to see. But today they did make it clear that this is according to people familiar with the matter, that the president would like to see this, the president-elect.
The key nomination we're watching is for Treasury, of course, and we did hear that the President-elect was going to be holding meetings with Kevin Walsh, with perhaps Mark Rowan as well. Have we had any update? Because this is taking a lot longer than other nominations.
Yeah, this is the one, of course, we at Bloomberg have been watching closely, and it seems like watching forever, although I'll remind that the election was just a little more than 2 weeks ago. But the rest of the nominations, Heidi, have come at kind of lightning fast speed and not so much Treasury. There was infighting between Howard Lutnick's team and Scott Bessent's team. Howard Lutnick yesterday was named the Commerce Secretary, so that takes him out of this picture. And now we have two others who were done Mar-a-Lago having talks with the incoming president today. And that is, as you note, former Fed Governor Walsh and Mark Rowan of Apollo. And also still in the mix is Scott Bessent. But in addition to that, Senator Bill Hagerty, who was seen with the president-elect at the launch of that spacecraft yesterday in Texas, along with Elon Musk. So Bill Hagerty apparently remains very much in the race as well. We hadn't heard any updates today beyond the fact that he was talking to these two men who were kind of late entrants. Of course, the question is the loyalty test. You know, this is very important to Donald Trump, but also he wants somebody, he has said for a long time, to want somebody that Wall Street would respect and that the markets would respect.
Yeah, the headlines around the Trump team come thick and fast. So on a circle back to one that grabbed everybody's attention last week, what's happening with the House ethics report on Matt Gaetz, and why is this important?
Yeah, so today the House Ethics Committee met in a closed-door session to consider whether to release the report, the ethics report on Matt Gaetz, now a former congressman. He was until a week or so ago, a congressman, then resigned and now has been nominated to head the Justice Department, to be the Attorney General of the United States. The allegations in the report, they're looking into some sexual misconduct allegations. And the report was the determination of the committee in closed session again. We're hearing all this from people afterwards, was that they were not going to release the report at this time. There have been some attempts now to try to force a hand. We've seen from Representative Sean Casten of Illinois. He wants there to be a privileged resolution that would require it to be released. And a number of senators who are going to have to vote on this confirmation want to see it released as well, including some Republicans saying they want to see all the facts about the former congressman and the nominee before they vote on it. But right now, and the Speaker of the House, Mike Johnson, does not want it to be released, said that's a precedent he doesn't want to see.
All right, Bloomberg's political news director, Jody Schneider there. Well, another story that we're following. Chigos founder Bill Huang has been sentenced to 18 years in prison for fraud and market manipulation tied to the 2021 collapse of his family office. The 60-year-old's prison term is slightly less than the 21 years the prosecutors were seeking. Huang was found guilty in July of leading a scheme to mislead bank counterparties into giving Archegos billions of dollars in trading capacity, inflating his portfolio value. More ahead on the Asia trade. This is Bloomberg.
Taking a look at, we're just about 20 minutes into the start of cash trading here in Australia. We're seeing a little bit of upside, about 0.3%. Of course, some of the sort of tech and AI and chip-heavy names throughout the course of the session might see a little bit more weakness. We're seeing kind of sideways trading when it comes to Chicago traded Nikkei futures at this point, and S&P futures a little bit to the downside, because even with those pretty robust numbers, we are still seeing that kind of failure to impress broader markets, given how lofty expectations continue to be every time we get earnings numbers out of Nvidia. Joining us now is Amy Patrick, who's a head of income strategies at Pendal Group. And we'll start with, you know, the most valuable elephant in the room, the most valuable elephant in the world, in fact. Does this speak to just the hyper exuberance when it comes to AI spending? And can we really deduce anything from the market reaction to these earnings, which were still, you know, very strong, and largely the problem is, you know, not being able to keep up with the demand side?
So I would preface this by saying I am not a tech or AI expert, but I have a feeling that we've reached peak Nvidia. Only not to say that the share price can't go any higher, but in terms of exactly as you say, the exuberance, the expectation, the sentiment. You know, this is a stock that beat analyst expectations, but didn't beat quite enough, and therefore the shares needed to settle off dramatically as a result. But I also think if you think about, you know, the state of development in the AI world, in order for Nvidia to achieve all of its ambitions, it's coming up against two bottlenecks. The first is that it will need so much more power in order to do what it wants to do for everyone's computers, right? It wants to embed AI into the hardware, but in order to run a lot of this, you need a lot of power. So it's coming up against power sources and limitations. But the second one is it's human talent. Because when you've got a generation of engineers within Nvidia who basically went from, you know, dirt poor tech nerds to billionaires in the space of, you know, a couple of decades, it starts to take the motivation off of those geniuses. And for the next round to come in and to expect to have the same ramp up in riches and in fortunes is unrealistic. And so it's running out of human talent as well. I think they're the two biggest bottlenecks that's facing the stock. But that, again, very unsophisticated.
I would never describe your analysis as unsophisticated, Amy. But the other thing that kind of jumped out at me in terms of your analysis over the last couple of weeks, it's just been a couple of weeks since the US election, is that you've said that your views have not sort of meaningfully changed. Yeah. How do you plan to navigate the next 2 to 4 years of, you know, drastically different US policy that's in many ways going to spill over to the rest of the world?
Yeah, the same way as I've navigated the last 2 to 4 years. You know, it might not have been Trump in the last 2 to 4 years, but there's been a lot of things happening globally, domestically. There's been big themes sweeping through the macroeconomic landscape that have caused us as active investors to stay on our toes. And I think, Trump getting elected, the uncertainty around the magnitude of his policies, the reach of those policies, and ultimately the impact of those policies is so uncertain. There's so much economic debate around it. Is it actually going to be inflationary or actually deflationary when you look at the effect of tariffs and trade wars the first time round that he implemented them? And because of that uncertainty, this is why I say my market outlook hasn't changed that much. The last couple of years has been incredibly volatile. 2023 in Australia, we saw the ASX go up and down and largely trade sideways for the majority of the year until December, and that might be the trading environment that we're in for the next at least a couple of years until the real cycles underlying the economy start to show, and whether Trump's policies are able to delay them, i.e. the eventual slowdown of the US economy and therefore the global economy, or whether he will able to prolong this current cycle. That's the ultimate debate right now.
All right, so if volatility's enduring, where do you go? Do you find something safe? Because I know you think the short US Treasury trade might be played out as well.
I do. So I already said peak Nvidia, so I'm not going to say peak Trump trade, which is the short US trade. I do think that a lot of it has already been priced in, and this might be a little bit too basic of a comparison, but when you think about Trump's first term, he instigated all these policies that were tax cuts, that were growth friendly. He gave companies rebates on repatriating international profits back home to the US. During that whole period between 2016 and 2018, US Treasury yields rose about 1%. Since the Fed 50 basis point cut in September to now, US Treasury yields have risen close to about 1%. And the first time it was against the backdrop of a Fed that was hiking. This time it's against the backdrop of a Fed that is thinking, definitely cutting and just thinking about the pace at which it's going to cut. So I would argue until we get more details of the Trump policies and their likely impacts, peak Trump has been priced in to how far bond yields can climb. And I know that this is an off-consensus view for the market.
I think a lot of people are waiting for details, and probably the Chinese government is among them as well. So I just want to get your views on China. We were hearing from Oaktree's Howard Marks yesterday. He says he loves it when people talk about China being uninvestable because it's time to go bargain hunting. Are you in that camp, or are you sort of on the wait-and-see side of things with China as well?
So I've maintained the view that all of these stimulus measures that have been announced for China and that are yet to be announced, I think, in the next couple of years, will serve China better than China-adjacent trades, right? So I don't want to express my medium-term optimism on China, for example, on the Australian stock market. I also don't necessarily want to express it on emerging market commodity currencies. But I do think that if you have the capability to invest directly in China, I agree with the Oaktree view. This is probably the time to start bargain hunting.
All right. Thank you very much. Amy, that's all we've got time for. Amy Shearpatrick is Head of Income Strategies at Pendal Group. We have more ahead on the Asia trade. This is Bloomberg. Right, let's check in on one of the stocks we're watching in Australia. It is the gold miner Resolute Mining, better by a little bit more than 1%. It's been whipsawing around. It was better by about 4% at one point. Anyway, the news here, the CEO, Terry Holohan, two other executives who were being detained in Mali have now been released. This is a report from AFP citing a judicial source and a local gold mine official. The word is an MOU has been signed between the government and the company. Resolute's going to pay Mali an initial $80 million on its $160 million claim, the other half coming in months. We do have no official comment from the company. It's lost about half its value in the past month. More ahead on the Asia trade. This is Bloomberg.
Blackwell production is in full steam. In fact, as Colette mentioned earlier, we will deliver this quarter more Blackwells than we had previously estimated. And so the supply chain team is doing an incredible job working with our supply partners to increase Blackwell.
It's Nvidia CEO Jen-Hsun Huang speaking on the earnings call for Nvidia that wrapped up a little under half an hour ago. Let's take a look at our Nvidia shares tracking a little bit softer. Suffice to say, expectations here were sky high. The results were still pretty good. Third quarter was a slight beat, very wide range of estimates. It didn't surpass the highest of those estimates. Fourth quarter forecast, well, that was a little disappointing. 37.5 billion. Come on, still pretty good. Blackwell chip production in full steam, according to Jen-Hsun Huang, and the CFO calling demand for that new chip staggering and exceeds supply. For more analysis now, let's get to Daniel Newman, CEO at tech research and advisory firm Futurum Group. Daniel, as I mentioned, their expectations for Nvidia are always on another planet. How did they square up with how did reality square up with what you were expecting?
Yeah, Paul, great to be back. This quarter was really tidy from Nvidia. Having said that, the expectations were exactly as you suggested, sky high. There was very little margin, and as we've seen this quarter-to-quarter progression, that sort of overrun from the beat, right? Was it a 2 billion beat, a 3 billion beat? Well, now you're talking about $500 million beat, and you're talking about a 2% guide, a range that put it at the sort of bottom end of that beat. And I think we're getting what we can expect. There's a little bit of this kind of fatigue, but make no mistake, this was a remarkably good quarter. The news around Blackwell is very strong demand for Hopper. And there's actually some gems in other parts of the business, like automotive up 70%, that no one's even talking about. So I'm really encouraged. And I think this is a very clean quarter. But at a 4 trillion run, it has to cool off somewhere.
Cash reserves are really starting to pile up for Nvidia as well. I think we're at 38.5 billion now. A year ago, that pile was only at 18 billion. How do you see this getting deployed? What can they use it for? Acquisitions or maybe even giving some money back to shareholders? As a footnote, the dividend is a pretty measly 1 cent.
The optionality is really significant. Now, you got to remember what took Nvidia from where they were to where they are was the ability to invest in R&D and build a moat that has been really insurmountable for competition up to this point. Now, competition is rising, so Nvidia would be smart to make sure that it has a war chest because it's going to need to invest to make sure that it can keep these annual cycles, that it can keep the enthusiasm, enough compute improvement, generation to generation, that Microsoft, Amazon, Google continue to spend $50+ billion a year to make sure that they're at the leading edge of what's possible with AI. At the same time, you do see perhaps a warmer climate for M&A. We know over the past 4 years in the US and around the world, it's been very difficult. A company of Nvidia's size has had to be very clever, making smaller deals, specialty, software program development. But the optionality of bigger deals might come back into play with the Trump administration. And with their war chest, it's certainly something that could be considered.
There's a lot of questions and perhaps some uncertainty over the rollout of Blackwell, right? Clearly, it's going to be a demand outstripping supply situation for a few quarters to come. Do you anticipate that this is going to be a problem? I mean, it's a good problem to have, to be sure, but how challenging is that aspect going to be?
Well, you heard them say that there are some supply, there are some constraints. And of course, having that demand is exactly as you suggested. It's a really good problem to have. The build-out period of time, the ability to build additional capacity, whether that's TSMC expanding capacity, is certainly something that needs to be considered. But the numbers, the guide, the visibility they have, the 37.5 billion and these numbers going forward for the next 4 to 6 quarters is rock solid based upon the current ability to build and supply. So the ability to expand is something that could be a bit of an opportunity for investors that are looking and saying, well, where does upside come here? You're running towards 3.5 trillion of market cap. Can we see 4? Can we see 4.5? Expanded capacity under these conditions of incredibly consistent and well understood demand is part of that. The other part of that was what I mentioned. It's the ability for them to build out automotive, to build out their gaming and get back to growth, bigger growth in those areas, and of course entering new markets like humanoid robots.
As an investor, I mean, how pricey is Nvidia looking at the moment when the outlook for sales is perhaps a little bit more mixed?
Yeah, I think this is the real consternation in the head of some investors right now. Those that have been with it for a while, that have seen high triple-digit and even 4-digit% returns, are starting to look at the situation, and they're basically saying, hey, will Google continue to spend $50 billion a year or more? Will Microsoft spend another $80 billion to build this out? And at the same time, is competition coming into play? Because we know that Microsoft, I was here with Satya Nadella this week at Microsoft Ignite, had the chance to talk infrastructure with him. We know these companies are very positive about Nvidia, but they're also looking to build their own hardware and infrastructure where it makes sense. We've seen AWS do it. We know that Google is building infrastructure, hardware, and semiconductors and training their own models. So they have to stay competitively ahead. And at the same time, they have to consider the fact that these other companies are going to want to build more of their own hardware, especially as this inference demand scales. So it is pricey here, but the growth and the expected continued growth, 50% next year, it does warrant it. And that's why I stay enthused and I stay bullish that this company can continue to grow into this really remarkable valuation.
There are other places to look as well, and in terms of buying shovels during a gold rush, some of the names in Asia, perhaps SK Hynix, Advantest, to name a couple, that might be a worthwhile play in this environment as well.
Paul, I like SK because I like the memory play. People need to understand beyond the compute itself, networking, memory, thermals, heat. You'll hear about heat a lot. You heard about this with Blackwell. These are all areas that if you can find companies that are differentiated and building scale and enabling the continued growth of Nvidia are worth looking at. And of course, you can't really talk about Nvidia without talking about TSMC. While we are certainly looking to build more capacity here in the US, TSMC continues to be the critical partner. They are the manufacturer at scale partner for Nvidia to continue to build out and meet the demand of Blackwell, Hopper, and all of its other parts. So you have to really like that. And you have to like the $6 billion they just got here in the US. You have to like the fact that they're looking to expand their capacity. They're buying or looking to invest in more plants. This is going to be key to Nvidia hitting its capacity and continue to hit these growth run rates that they've been able to achieve.
We heard recently from the former Google CEO Eric Schmidt talking about how he thinks the US is actually trailing China when it comes to the development of more powerful AI infrastructure. What do you think about that? And I suppose more broadly, as we kind of look ahead to the next 4 years under a second Trump administration, do you think the geopolitics of it all, the government policy side, could be quite disruptive?
I do think there will be meaningful changes in policy. I do think the relationship between US and China will be even stricter. And we know the controls have been put into place, but we also know there's plenty of workarounds. We had that recent TSMC soft go. That actually led to newer restrictions below 7 nanometer. I don't see China being able to address the infrastructure, being able to deliver the scale of yield of these high performance AI chips. I don't doubt the resolve of China, and I don't doubt the willingness to invest to be the leader. I see AI as the frontier in which the economic war of the world is going to be won. The U.S. will want to slow down. And of course, there is interdependencies between the U.S. and China that we need to consider, because we can't just go and completely cease the relationship. We've got to manage that relationship. And so that's going to be a really interesting conflict. And of course, the way Taiwan and China get on is so critical for semiconductors too. I think Trump wants a strong market. He wants a bullish market. So harming Nvidia, harming Google's ability to grow, too much regulation makes it difficult for the stock market to go at the rate that I think Trump wants to see it go. So I think there's going to be a bit of a give and take there. I'm optimistic, but I do think China beating us in any capacity is something he will absolutely fight against.
All right, Daniel Newman, CEO at the Futurum Group, thanks so much for joining us today with your analysis. And we've got a little bit more data on this as well, Haidi. A study just out from the Wharton School and the consulting firm GPK Collective about AI use in the workplace finds that about 72% of decision makers report that generative AI is used at least once a week, up from 37% last year. Once a week seems a bit conservative.
Yeah. I mean, adoption also picked up in areas, Paul, that had a bit of a slow start last year, including HR, but also marketing, operations, and legal and finance. Weekly usage was almost as prevalent as in IT. The numbers in this are sort of a little bit confounding in that sense. They seem quite conservative, right? But the report did find broadly firms moving beyond kind of the initial hype and amazement around generative AI and towards more levels of practical usage. So things like document and proposal writing, editing, 64% of total respondents following also data analysis, analytics at 62%. More than half of the decision makers talked about customer service and support, fraud detection and prevention, as well as financial planning and forecasting.
I think we're just getting started. Anyway, Qualcomm CEO says the company's push into new markets is going as planned, even after their outlook failed to impress investors. Cristiano Amon tells Bloomberg he's still confident about reaching targets as the company looks beyond phone processors for growth.
We have been on this trajectory since 2021 when we had our last investor day and we outlined the plans to grow the company to other markets. We realized that the technology we produce for mobile could be very disruptive and we could build actually a leading position, what we did in automotive, what we did in PCs. And we thought would be the right thing to tell investors as we look in the next 5 years, how we're going to diversify the company. When you look at the company right now, most of our revenue is mobile. Mobile is a great market, but it doesn't grow as much until we have an AI upgrade cycle. However, those other markets that we're going, it will drive higher multiples. So as those revenues from non-mobile become a bigger percentage of Qualcomm, we have an opportunity to actually see a multiple expansion. So we want to outline to investors our trajectory. And what's exciting is really where we are right now. We're very happy with the results of the company in the near term. We show on the last earnings call, we're growing in all markets, including handsets. And we put out in 5 years, we're going to have $22 billion of non-handset revenue. But bearing any cyclicality on the market, we expect to continue to grow annually into those targets.
Bearing any cyclicality, can you just talk through like what are the downside risks to automotive demands, to people actually upgrading to new and refreshed Android phones, which are going to remain?
Yeah, what I mentioned about cyclicality, I think the semiconductor industry, we have seen on the past few years, we had a bunch of different cycles, different markets. Inventory corrections, we have capacity constraints. We're not assuming that going forward, but some of that, could happen. But when you look of the normalization of the market we see right now, if that continues, we feel very good about the ability to grow annually. To your question is, cars is one that we're incredibly excited because people are now buying new cars because of the computational capabilities and those big screens and the digital capabilities of the car. And I think that's what actually creating demand for our technology.
Qualcomm CEO Cristiano Amon there speaking with Bloomberg's Caroline Hyde. Let's get you the latest when it comes to the corporate stories that we're following. And NIO reported lower than expected third quarter revenue as price wars in China takes its toll on the premium EV maker. The company also reported a wider than expected net loss of over $60 million. Sales stood at $2.6 billion, with deliveries topping 60,000 cars. NIO last year slashed the prices of its vehicles by as much as $4,000. Ford is planning more job cuts in Europe as an industry-wide transition to EVs loses traction. It's looking to slash another 4,000 roles, mainly in Germany and the UK. The reductions amount to about 14% of its workforce in the region and will hit production by the end of 2027. Comcast is planning to spin off cable TV channels, including MSNBC, CNBC and USA, in a new publicly traded company. Digital assets such as Fandango and Rotten Tomatoes will also be included in the new entity. But the NBC broadcast network will remain with the parent company, along with Peacock and Bravo. The spin-off aims to reduce Comcast's exposure to the declining traditional TV business. More ahead on the Asia trade. This is Bloomberg.
The head of Japan's largest labour union is calling for Prime Minister Ishiba's government to accelerate efforts to boost wages. Rengo President Tomoko Yoshino told us exclusively why she's calling for reform of laws affecting smaller companies to allow them to address labour shortages.
One of our reflections this year was to raise the wage level of small and medium-sized businesses, as the gap between large companies and small and medium-sized ones has widened. In order to achieve this, it is necessary to secure the resources to raise wages for small and medium-sized enterprises, so price shifting, including labor cost, will be very important.
We are seeing a lot of volatility in the yen. We are seeing slowing demand from the likes of China, maybe even the United States. How difficult do you expect it to be for these small and medium-sized businesses to be able to have good enough business to be able to hike wages?
As workers, we're in the manufacturing side of the business, and we believe that products should be priced appropriately, so it is very important to ensure that we can sell our products at a fair price. In order to do so, we would like to request that prices, including labor costs, be appropriately passed on to customers. Also, with regard to the exchange rate issue, as the yen depreciates, import prices will rise. So it is very important to seek appropriate prices.
The weak yen has a lot to do with monetary policy from the Bank of Japan. How do you expect the normalization of policy by the central bank to have an impact when it comes to wage negotiations and just the lives of workers?
We would like to decline to comment on that matter, but we're a labor union and we're seeking to enrich the lives of consumers and workers. In that sense, this year, we were able to raise wages to the highest level in 33 years. But since prices have risen even more than that, wages have not been able to keep up. We would like to make sure that this year's wage hikes will be put into a cyclical path for next year and beyond, and that we can realize wage increases in the same way.
Are policymakers, the Japanese government, doing enough to help you achieve those goals, to help the workers?
Last year, we began holding meetings to exchange opinions between government, labor, and management. And since the government, employers, and our labor union are all looking in the same direction toward raising wages, I think in this sense, we share the same challenge in Japan. As for wage increases, our treatment of employee is determined through individual labor management negotiations. However, since the overwhelming majority of companies do not have labor unions, it is difficult for them to negotiate with the company. So we're calling on the government to create an environment in which it is easy to raise wages.
What would you like to see from policymakers in terms of reining in inflation, something that is affecting the workers' livelihoods?
Yes, that's right. We're looking for stable increases in both wages and prices. And since prices are rising considerably, especially for items that consumers need, I think it will be very important to address the issue of high prices. However, it is not that high prices are bad. Our wages just need to rise more than that. Currently, wages in Japan are very low compared to the rest of the world. I think we are at a critical juncture in raising wages.
Rengo President Tomoko Yoshino there speaking to Sherry earlier. Watch us live and see our past interviews in our interactive TV function. That's at TV Go. You can dive into any of the securities or the Bloomberg functions that we talk about, plus become part of the conversation. You can send us instant messages during our shows. This is for subscribers only. Do check it out. It is at TV Go. This is Bloomberg. A threatened shutdown of Sydney's rail network has been pushed back to Friday morning as negotiations continue to stop what would be the largest transport disruption in the city's history. Let's bring Bloomberg's Kira Wright for the latest. So what can we expect?
So as you said, initially the disruptions were set to begin late tonight, but we're now expecting it to begin early tomorrow morning. There is a meeting that's slated for the next couple of hours in which the unions and New South Wales government will discuss a potential solution. But if that does not go ahead, then it means that we can expect at least a couple of days over the weekend of disruptions.
And that disruption could be pretty extensive. There's some major events happening in the city. What could we anticipate?
Yeah, that's right. So we know, as Haidi mentioned, at least 1 million people use this network every single day. Over this weekend, there's a Pearl Jam concert. There's also 2 soccer games. So a lot of commuters that might have been relying on the network to get around could be potentially left stranded.
When we think about the sticking points with the unions and negotiators, what kind of led to this point?
Well, there were some initial discussions between the unions and the New South Wales government in which they tried to come up with a solution, but they weren't able to get there. So initially, the union, they said that they wanted to run a 24-hour service, and they also asked for a 32% pay rise over 4 years. The government was able to offer the workers a wage increase of 9.45% over 3 years, but that was ultimately rejected.
Bloomberg News reporter Kira right there, who's braced for some degree of disruption in Sydney over the next few days. And of course, there's also the scheduled downtime for the metro system as well over the weekend. So really compounding that confusion. But in the meantime, let's take a look at how Australian assets are faring at the moment. We're just about an hour into the start of the cash trading session. ASX 200 stocks are up by about 0.3%. We're seeing some gains being put on when it comes to financials, the banks, healthcare shares as well, lifting the broader benchmark. We are expecting a pretty muted session across Asia today as that disappointment over Nvidia's still very impressive numbers continues to play out there as well. We're also watching some of the reaction when it comes to Australian and Kiwi bonds as well. We saw treasuries falling after a 20-year auction came through. It's a bit on the disappointing side, Paul.
Yeah, those Nvidia numbers are a significant macro event. Let's talk about them. Third quarter was a slight beat. There was a huge range of estimates, though, and it didn't surpass the highest of those. So a little bit of disappointment. We saw Nvidia going a bit backwards in the post-market. Fourth quarter forecast was also not what the market was hoping for. 37.5 billion, still pretty enormous, but the range of variability on whether or not that happens, plus or minus 2%. Some of the remarks that we had in the post-earnings call, Blackwell chip production in, quote, full steam. The CFO describing demand for that next generation chip as staggering and exceeding supply. And of course, the company's existing Hopper chip also remains in fairly tight demand as well. So it's going to take a few quarters, Nvidia says, before that Blackwell chip production supply is enough to satisfy demand. Also, Nvidia is sitting on a cash pile of more than $38.5 billion. We'll be watching some of those Nvidia-linked names with the get-go. SK Hynix, Advantest, to name a few. Market opens in Seoul and Tokyo next. This is Bloomberg. This is the Asia Trade. We are counting down to Asia's major market opens. And Haidi, one thing we're obviously going to be watching closely for is reaction to those numbers from Nvidia. Not quite what the market was hoping for, but what the market was hoping for was pretty nuts.
The market continues to hope for more and more and more, right? Just these loftiest of expectations. So even when you get really robust numbers and really even when the forecasting points to more demand and perhaps a little bit of a bottleneck on the supply side, we're still kind of seeing that uncertainty in the market reaction. Yeah, and we are just a few seconds away from the open now. We're going to be watching, among other stocks, SK Hynix. Got a shout out in the Nvidia post-earnings call. Tell you what didn't get a shout out was Samsung. So let's see how some of the reaction is. And before we get to that, I'll just bring you some breaking news out of South Korea. This is first 20 days trade for the month of November. We've seen exports rise pretty solidly, 5.8%. Imports, meanwhile, declining by 1%. So first 20 days of trade surplus out of South Korea, $798 million. And if we take a look at the Kospi at the moment, we're better by 0.4%. Let's take a look at how some of those chip names that I mentioned are performing right now.
We've got SK Hynix, which is a key supplier to Nvidia, off by about 1% right now. Samsung, meanwhile, a bit softer as well by the same amount.
Yeah, take a look at what we're watching when it comes to Japan. Of course, some of the tech-heavy names and the chip and AI-related names in there are ones to watch today as well. But we are seeing sort of a muted upside, if you will, after yesterday's losses for the Nikkei 225. The topic's also just holding its head above water. Dollar yen is one to watch. We see that sort of resumption of dollar strength, casting a bit of a stormy outlook when it comes to Asian FX as well. The dollar rising for the first day out of 4 in the overnight session. That bid for treasuries and haven currencies finally kind of catching up to that haven trade, if you will. That sort of started to ebb, with investors continuing to assess those geopolitical tensions when it comes to Russia and Ukraine. So watching that resumption of yen weakness. But as I mentioned, it is really these tech-heavy indices across Asia expected to see that tepid reaction after the Nvidia slump, the disappointment, despite, some pretty good numbers. Expectations were just so high. Samsung Electronics, that heavyweight there, about 0.7% low. We are also, as Paul mentioned, watching the likes of SK Hynix, seeing some downside there. Interestingly, though, Advantes as well as Biden Co. up by about 1.5% apiece. The broader Asia-Pacific Semiconductor Index just flat at the moment. Let's get some analysis now. Our Bloomberg Technology Senior Executive Editor Tom Giles joins us now for more. So is this really a case of just the loftiness of investor expectations every time Nvidia reports?
This is a study in good problems to have for a big company like Nvidia. You're talking about, this is not about demand, this is about supply. This is about this company's ability to meet demand that is just far surpassing its ability to produce chips. And so Nvidia is having to temper expectations just a little bit. Nothing in these numbers would suggest to me any cause for real concern. That dip in the shares in aftermarket trading, a couple of percentage points. Remember, this is a stock that has doubled over the course of 2024. This is a company that's still posting almost 100% growth. I was looking at those growth numbers, and I'm thinking to myself, this is a company that's been around for decades, but it's growing like a startup, and that's just testament to the demand for generative AI and the infrastructure that's needed and the chips that is needed to meet to power this revolution that we're all in the midst of right now.
Yeah, Tom, so many nice problems to have, and another one of them is demand for its products just massively outstripping supply, sitting on a lot of cash as well. How can it deploy that cash to help improve supply and get through some of these bottlenecks?
Yeah, they talked about that on the call, and what they need to do is devote more resources toward getting those Blackwell chips produced. They're meant to start this quarter. CFO executives talked about demand lasting well, this constraint on demand outpacing supply well into 2025. What they're going to do, and you're going to see it taking a toll on margins, is devote more and more resources, more and more engineers, more and more resources to ramping up production and meeting supply more efficiently. As you do that, you're spending more. So that's one way you're right, they've got a big cash pile, and they're going to be deploying it toward devoting the resources that they need to meeting demand for Blackwell.
Is there any concern about the concentration of their client base, given that a number of the big names, amongst them Meta, Microsoft, Amazon, have all kind of reaffirmed their commitment to AI investment?
There is a relatively small number of customers that are the largest for Nvidia. I would say that, yeah, and certainly some analysts that we've spoken to do have concerns about customer concentration. I think that concern would be deeper if these customers weren't really deep-pocketed. These are some of the wealthiest, these companies have huge cash piles, and as you said, if you look back at their earnings calls, they've all said, we are going to keep spending on AI infrastructure and everything that we need in order to build and feed and draw inferences from these large language models that we're building. So I think that the concerns there, yeah, go ahead.
No, finish that thought, Tom.
Well, I think the concerns would be deeper if these customers were in some way like on shaky ground or unable to continue to splash out on chips and on the resources they need for their generative AI models. The fact of the matter is, they're in great shape. They get a lot of money to spend, and as long as investors are willing to be patient for these customers to spend, then they're going to keep doing it because this isn't going away. Where you would start to become a little bit concerned is if you saw competitors like an AMD and to some degree Amazon, which of course is a big customer, they all want to find ways to lessen their reliance on Nvidia as a chip maker, as a chip supplier. The fact of the matter is Nvidia is really, really far ahead in that race, and it's going to take a really long time and a lot of energy and resources for an AMD or an Amazon, for that matter, to catch up.
Our Senior Executive Editor of Technology, Tom Giles there. And let's get some more analysis on this from our Hong Kong studios. Jason Lui, who's a head of APAC Equity and Derivative Strategy at BNP Paribas. Jason, really great to have you with us. And of course, in a lot of ways, the market reaction, the investor reaction to some pretty solid numbers out of Nvidia is unsurprising, right? These expectations continue to build. The valuation continues to build as well. So is this still a compelling name for you, or do you sort of start to look beyond to see what other opportunities there are across the AI and chip space?
Sure. I think that's a great question because indeed Nvidia is a bellwether for the entire industry. I think the way that we think about the situation is more about how it impacts different parts of the supply chain. I think both yourself and Paul mentioned that there are different suppliers being mentioned on the call. And I think your colleagues Tom also mentioned earlier about the supply constraints. So this actually have a different implication across the stocks in Asia. So for example, the companies who are providing memory chips may behave differently than the ones that are providing the semiconductor equipment that may be required to ramp up the production capacity. And so the way we think about it is that over the past few months, there has been a lot more divergence even within the semiconductor sector, depending on if you're upstream or downstream. And based on the latest result out of Nvidia, it seems likely that these type of divergence will continue.
Here in Asia, what are sort of your preferred proxies at this point?
Sure. I think if we look at the Asian market, they're clearly Japan, Korea, and Taiwan. All three of them have very high exposure to semiconductor supply chain as a whole. But I think if you look at them more closely, they actually occupy different parts of the supply chain. And so if we were to take a look at the latest development, it seems that Taiwan is likely to be benefiting more directly from potential ramp-up in capacity, whereas in Korea and Japan, as an index, there's a little bit more mix due to other external factors.
Jason, we had a guest last hour who saw China falling further behind in the AI chip race and a real reluctance from the US to give them any edge in terms of trying to catch up. What's your analysis of the state of play of AI in China right now?
I think it's certainly difficult to compare directly between China and AI in terms of the raw computing power given the US export restriction. That being said, if you take a look at the policy that was laid out in the third plenum in China, they also introduced the concept that China wants to invest heavily into what they call hard and core tech. And it seems to us that the domestic investors are increasingly embracing that idea. So if you recall, about a few weeks ago, there were news articles suggesting that there could be more export restriction to China on AI-related chips, but the domestic suppliers actually rallied on the back of that. So perhaps from an investment standpoint, investors are now willing to believe that there's a lot more willingness and capital commitment to I think, support the domestic supply chain when it comes to AI.
In terms of Chinese assets more broadly and through the lens of soon an incoming President Trump, and possible China tariffs, the potential for the walking back of US subsidies for electric vehicles as well, what's your outlook for other China stocks? And I'm interested particularly in Chinese EV stocks.
Yeah, I think we'll take a look at it in three ways. Number one, for the overall market, will likely be in a consolidation stage in the near term because based on what we understand from the MPC recently, the Chinese policymakers is unlikely to preemptively introduce large-scale stimulus without seeing the true impact of the potential tariff. And when we look at onshore market versus offshore market, and in this case, Hong Kong or the ADR markets, I think the offshore market will be more sensitive to any potential increase in U.S.-China tension. Whereas in the onshore market, I think there will be a lot better supported thanks to some of the new lending facilities that is being introduced by the PBOC, as well as the so-called market cap management guidelines being introduced by the CSRC. To your point about EV, certainly it's one area that is gaining a lot of attention. So when we take a look at the HS Tech Index, for example, the earnings of this index has been revised up by 20% year to date. And yet, I think this index as a whole could also be more sensitive to the geopolitical tension given the relatively high ownership of these companies.
Where do you find a little bit of protection then in terms of some of the more sort of idiosyncratic stock stories or sector stories that are more domestically focused that may not see the implications of geopolitics?
Yeah, I think one area that we are very focusing on to understand how China is going to embrace the so-called corporate governance reform. We know that there has been a very successful theme in Japan, and that is part of the main reason why international investors are now buying Japan. And we've also seen Korea trying to follow suit to a large extent. And so this is certainly something that the Chinese regulators are looking at it very closely. And I think for us, the recent introduction of the so-called market cap management guidelines is another step towards that progression. And so while the overall market could be subject to the headwind of a rising U.S.-China tension, a lot of these low PB stocks in China who are now having the regulatory obligation to increase their valuation could be an interesting area to look at. And especially now that the CSRC had actually included quite a few major indices to that guideline, which may allow the investors to narrow down their focus on some of the potential stocks that will likely increase their shareholder return in the medium term.
All right, Jason Lui, head of APAC Equity and Derivative Strategy at BNP Paribas. Thanks so much for joining us. We have more ahead on the Age of Trade. This is Bloomberg.
New York prosecutors have indicted Indian billionaire Gautam Adani on bribery charges. They're accusing the Adani Group chief and other executives of hiding illegal payments from US investors. Earlier this year, we spoke with Gautam Adani's nephew, Sagar Adani, who's among those indicted on the US bribery investigation.
And if I may ask, the US DOJ investigation, which has widened of late to figure out whether group-related entities or people have paid some bribes in India. This is the news that Bloomberg had reported. Now, this is a business which comes under your purview. Do you know anything about this?
So we, as a company policy, don't typically respond on legal or quasi-legal matters. We made a public statement about this overall anyways, that if there is even an entity that looks at it, it's in due course of their regular business and their regular interactions. So there's nothing specifically in particular that we have to disclose to the market that's separate or in addition from that.
Let's get some more from our Bloomberg Legal Enterprise reporter, Patricia Hurtado. So, Patricia, this has obviously been in the works for a while. Or what do we know?
Well, we saw a stunning indictment that was unsealed today against Mr. Gautam Adani and 7 other businessmen related to his companies. It's amazing because it spans India to the United States. And it alleges that Gautam Adani paid and his associates paid more than $250 million in bribes to Indian government officials. So that's a domestic action that happens there to obtain lucrative solar energy contracts with the Indian government. But then it's alleged that to market it, he also later they managed to sell off certain bonds and loans to U.S. investors, which is the nexus of how the United States gets into this. So, and then there's an allegation that when the U.S. government came calling to make inquiries, 4 of the co-defendants of Mr. Gautam Adani basically destroyed evidence and are now charged with obstruction of justice when the FBI and the Justice Department came calling.
So where did they come calling, and where did this alleged crime actually take place?
Well, apparently there may have been some discussions with U.S. investigators. It doesn't say exactly where the questioning happened, but it sounds like it was tied to the U.S. Issuers Board of Directors. So there's a fraud scheme that was involved tied to the New York Stock Exchange issuers. There was transactions that were investors bought into Adani-related loans and that were marketed on the stock exchange in a company called Adani Green. And it seems like there's another company involved. So it's quite stunning because it goes from India to the United States.
And in terms of the bribes that are claimed to have been paid, how much money are we talking about here?
We're talking at least $250 million paid to Indian officials, as well as multi-million dollars in the other scheme. They did these things, for example, they did PowerPoint presentations where they kept track of their bribes, and they communicated with each other in WhatsApp presentations and messages, which they tried to delete, but the U.S. government got copies of. So it seems like they have a trove of evidence that they've managed to amass. On the downside, none of these people are in custody. And it's unclear whether the Indian government would ever move to extradite them to the United States to face prosecution.
Mm-hmm. All right, Bloomberg's legal enterprise reporter Patricia Hurtado there. Another story that we're following, Kiosk founder Bill Huang has been sentenced to 18 years in prison for fraud and market manipulation tied to the 2021 collapse of his family office. The 60-year-old's prison term is slightly less than the 21 years prosecutors were seeking. Huang was found guilty in July of leading a scheme to mislead bank counterparties into giving Kiosk billions of dollars in trading capacity, inflating his portfolio value. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at what we're watching across broader commodities, and energy prices holding pretty steady there. Just New York traded crude about $69. US crude stockpiles expanding for a third week. Traders continuing to monitor that situation when it comes to Ukraine and Russia. We saw also Brent sort of trading close to the same sort of levels of stability, just under $73 as well. We saw that rise of 545,000 barrels last week for US crude inventories, significantly smaller than what we saw in that industry report. We're also seeing a little bit of upside when it comes to trading in iron ore, and gold continuing to hold on to some of those gains on this haven trade as well. Well, Ukrainian forces have fired British cruise missiles at targets inside Russia for the first time, expanding the use of Western-provided long-range weapons. Let's get the latest now from Bloomberg's Michael Haidi. So we continue to watch this play out at what, I guess if you look to next year, could be, not that long away potentially from how this conflict might be concluded.
Yeah, I think we're really seeing a ramping up on both sides, a positioning of trying to position themselves ahead of Donald Trump's inauguration and the jockey, I guess, the negotiation to try to find some sort of compromise. And obviously, Russian forces and the North Koreans have been moved into that area, which is why the Western countries have allowed Ukraine to start using missiles onto Russian territory, onto Russian territory. They're quite easy targets because they're sort of massed areas and ammunition dumps and that sort of thing, because Russia was able to do this knowing that it wouldn't be attacked. So that calculus has now changed. But yeah, look, I mean, the parameters sort of what a peace deal would look like, I think, fairly straightforward, is that Russia would keep some of this area that it's occupied, and Crimea would be legitimised. But Ukraine would need a full security guarantee, which basically means coming into to NATO. And that's the opposite of what Russia's talking about. It's saying any peace deal has to mean Ukraine is not in NATO. So you can see where it should end, but how it does end is a different question.
This use of US and UK missiles that Ukraine is now firing into Russia, is this in a way given incoming President Trump a bargaining chip to use?
Well, look, it definitely is, because Trump has been all signals that that he'll cut aid to Ukraine, and he's very pro-Putin and all this sort of stuff. But Trump's never had to deal with Putin, and it's not obviously not as straightforward as Trump would suggest. And the reason that the rest of the world is always wrong-footed by Putin is he's not always straight in the way he says things. Similarly, with them coming out saying we're ready to negotiate peace, and President Macron of France said very well. He said whatever they say, we can see that they're gearing up for more war. The option, though, that Trump has is that if Putin is recalcitrant, that he could say, well, I'll arm Ukraine more. We'll create more problems for you, kind of thing. So he does have options. And I guess Trump has the advantage of because he doesn't have those traditional boundaries, it's a bit like Putin has, because he doesn't really sort of see himself as restrained by those boundaries. He can think outside the box kind of thing on this sort of stuff. So it'll be interesting to see what sort of approach he takes.
All right, Bloomberg's Michael Heath there. And in terms of what's been going on in the incoming Trump White House, Heidi, we're hearing more about the plans of DOGE, Department of Government Efficiency,
right,
and getting federal employees back to work, and also, well, cutting the size of the workforce. And those two things are connected. Elon Musk suggesting that by forcing federal employees back to the office, that might create a bit of natural attrition.
Yeah, it does certainly seem like he'll go head-to-head with workers, and to kind of just be like there's no work from home option at all, right? Saying if federal employees don't want to show up, American taxpayers shouldn't have to pay them for the COVID-era privilege of staying at home. We've seen so much action being taken just in the last couple of weeks, and in fact, Jody earlier pointed out it was only 2 weeks ago that we had the election. It feels like we've had a lot of momentum behind appointments. Of course, the noticeable one that hasn't yet been decided is Treasury. We did hear that on Wednesday, so perhaps yet to come are these meetings to be held with President Trump and President-elect Trump, I should say, and his top contenders, Mark Rowan, as well as the former Fed official Kevin Walsh. So that's obviously the key one that we're watching out for. We are now also hearing that the surgeon and author Marty McCurry is seen as a leading candidate to run the FDA.
And also maybe a crypto role in the White House office as well, although nobody seems to know quite how that would work. But that's not unusual. Nobody seems to know quite how the Bitcoin Strategic Reserve would work either. But we're also getting another line as well, that possibly the Keystone XL pipeline could be revived also. So plenty of headlines coming out of that incoming Trump administration. We have more ahead on the Asia Trade. This is Bloomberg.
Take a look at how we're faring. We're in about an hour and a half into the start of trading here in Australia, half an hour into markets being open across Japan and Korea. We're seeing quite a bit of downside there. Really, that dip coming as Nvidia results failing to impress very lofty expectations. The revenue guidance did not meet those highest of forecasts. We have kind of seen that trickle through when it comes to the tech and AI and chip heavy indices, the likes of the Nikkei 225 as well as the Kospi there, down by just about 1/10 of 1%. We are seeing the opposite direction of trading when it comes to Australia, though. Not as many tech names, and certainly not as many sort of chip and AI exposed names, but we are seeing the likes of banks as well as some of those healthcare names driving some modest gains here in Sydney.
Let's take a look at how some of the Asian chip names are doing more specifically, because a number of these companies do supply Nvidia. Among them, SK Hynix, unfortunately not on the board there, but it did get a mention in the supplier call, along with Micro and SK Hynix shares better by 1%. Samsung, meanwhile, also turning positive, was in negative territory for a while. Now, Samsung didn't get mentioned on the investor call, and that has led some to suggest, well, it is struggling with some of the latest technology and its ability to supply Nvidia as well. Advantest, meanwhile, giving up some of those early gains, now in retreat by 4%. This supplies semiconductor testing devices. Well, Nvidia has obviously captured a lot of investor attention this week, and Chinese tech and internet names have also been reporting earnings. We'll be seeing Baidu's numbers later on today, and Bloomberg Intelligence is expecting a profit drop as its AI hype looks overdone. Let's get some more perspective on the China internet sector with Alicia Yap, head of Pan-Asia Internet Research at Citigroup Markets Asia. Alicia, thanks for joining us. And I do want to start there with that remark from Bloomberg Intelligence about Baidu's AI claims as being overhyped. What's your analysis?
Well, I guess to be fair, there actually has been investing in AI for more than 10 years. The resources that they put in, then on the autonomous driving, as well as now with their Gen AI, the Wenxin, right? So I would say, to a certain extent, it depends on what investor was looking for. From the technology perspective, I don't think it's overhyped. Baidu definitely is one of the top few leaders in terms on the technology front and in terms of the Gen AI, the large language model, and depends on if you are thinking about on how they can monetize. I think it is still in a very, very early stage, which actually they've been doing a lot of the transformation, like replacing, for example, testing out, replacing the first sponsor link with their Gen AI answer, which indeed has, kind of cannibalized their existing advertising revenue, which that's why in the last couple quarters, and it will be probably today's number, we are seeing the advertising revenue on the core Baidu side will be actually declining on the year-over-year basis, despite, macro always is one of the challenging factors, but then the transformations on replacing the Gen AI answer into the first sponsoring, that also been, cannibalizing the revenue on the advertising side.
So in terms of bottom line numbers and outlook, what are you expecting to hear from Baidu today?
So we do expect Baidu core advertising will be down. We're modeling like negative 4%, so down 4% year over year. Their cloud business should still be positive growth, but it might be decelerating from the last quarter. We are modeling now 12% up year over year. But then overall, because advertisings are still majority of the revenue, so if advertisings are declining, then on the group level, in terms of the Baidu core, it will actually be declining as well. Like we model slightly down year over year for this quarter. And then on the profit side, they should be more or less stable to slightly down. Part of it is because of the advertising is a higher margin business. So if advertising is declining, then it's also impacting the operating profit.
Broadly, Alicia, as we head into another 4 years of a Trump administration, are you holding any expectations of how disruptive some of the sort of geopolitical policies might be for China tech?
There's a lot of saying about potential disruptions, but I think a lot of that is already priced in to some extent onto the stock. It depends because we couldn't judge in terms of what the upcoming administration is going to do. But in terms of all the chip restrictions, it has been been in place. Depending, it will be more. But I guess over the past 1 year plus or 2 years, Chinese company has been doing a lot of alternative on their end to kind of navigate themselves through all these restrictions that are in place. So it will definitely be slower in terms of the ramp up from the Chinese side versus the rest of the world. But I guess, because most of the Chinese cloud player, whatever the services, the businesses that they're providing is actually mostly to domestic for the Chinese enterprises. So in that sense, it's not in terms of the timing that whether it is critical that they are lacking behind the overseas, because mostly you're providing to Chinese enterprise, and all the players are in the same position anyway in terms of the restrictions.
We're obviously heavily focused on Nvidia at this point. I thought it was interesting. We heard from Eric Schmidt, formerly of Google, of course, saying that he sees the US actually lagging China when it comes to AI development. How do you rate the progress that's being made across Chinese big tech in terms of the technology and the levels of AI spending that we're seeing?
Sure. It is a good question. I think from the large language model, from more the technical aspect, China will be lag behind because of all sorts of restriction. But then if you come down into the future, when you have the applications, the AI application, I don't necessarily think China will be lag behind. Indeed, because of the data, right, the volume of the data, and using AI in terms of boosting the targeting effort. As we all know, China is a lot of the Chinese internet company has been leading in terms of targeting effort. So using a lot of this AI technology, I'm sure on the application side, China not necessarily will be lag behind. Indeed, potentially we could come up with maybe a surprise, an app that is coming out with some breakthrough. That is also possible.
Alicia Yap, Managing Director and Head of Pan-Asia Internet Research at Citigroup Markets Asia. Well, Qualcomm CEO says the company's push into new markets is going as planned, even after their outlook failed to impress investors. Cristiano Amon tells Bloomberg he's still confident about reaching targets as the company looks beyond phone processors for growth.
We have been on this trajectory since 2021 when we had our last investor day and we outlined the plans to grow the company to other markets. We realized that the technology we produce for mobile could be very disruptive and we could build actually a leading position, what we did in automotive, what we did in PCs. And we thought would be the right thing to tell investors as we look in the next 5 years, how we're going to diversify the company. When you look at the company right now, most of our revenue is mobile. Mobile is a great market, but it doesn't grow as much until we have an AI upgrade cycle. However, those other markets that we're going, it will drive higher multiples. So as those revenues from non-mobile become a bigger percentage of Qualcomm, we have an opportunity to actually see a multiple expansion. So we want to outline to investors our trajectory. And what's exciting is really where we are right now. We're very happy with the results of the company in the near term. We show on the last earnings call, we're growing in all markets, including handsets. And we put out in 5 years, we're going to have $22 billion of non-handset revenue. But bearing any cyclicality on the market, we expect to continue to grow annually into those targets.
Bearing any cyclicality, can you just talk through what are the downside risks to automotive demands, to people actually upgrading to new and refreshed Android phones, which are going to remain?
Yeah, what I mentioned about cyclicality, I think the semiconductor industry, we have seen on the past few years, we had a bunch of different cycles, different markets. Inventory corrections, we have capacity constraints. We're not assuming that going forward, but some of that, could happen. But when you look of the normalization of the market we see right now, if that continues, we feel very good about the ability to grow annually. To your question is, cars is one that we're incredibly excited because people are now buying new cars because of the computational capabilities and those big screens and the digital capabilities of the car. And I think that's what actually creating demand for our technology.
That's Qualcomm CEO Cristiano Amon speaking with Bloomberg's Caroline Hyde. Let's get the latest now from the corporate front. NIO reported lower than expected third quarter revenue as a price war in China takes its toll on the premium EV maker. The company also reported a wider than expected net loss of more than $60 million. Sales stood at $2.6 billion with deliveries topping 60,000 cars. NIO last year slashed the prices of its vehicles by as much as $4,000. Ford is planning more job cuts in Europe as an industry-wide transition to EVs loses traction. It's looking to slash another 4,000 roles, mainly in Germany and the UK. The reductions amount to about 14% of its workforce in the region and will hit production by the end of 2027. Comcast is planning to spin off cable TV channels, including MSNBC, CNBC, and USA, into a new publicly traded company. Digital assets such as Fandango and Rotten Tomatoes will be included in the new entity. But the NBC broadcast network will remain with the parent company, along with Peacock and Bravo. The spin-off aims to reduce Comcast's exposure to the declining traditional TV business. More ahead on the Asia trade. This is Bloomberg.
Take a look at haven assets as we continue to watch for the implications of developments in the conflict between Russia and Ukraine. Ukraine firing UK cruise missiles at Russia for the first time, and the expansion of the use of these Western-approved weapons. Taking a look at gold, which is more or less holding on to most of those gains. We did see treasuries falling after a 20-year auction disappointed, but broadly we're seeing most of those gains across the haven assets holding, although that return of dollar strength, meaning that the yen is trading less so in that direction, but gold continuing, namely gaining for that third day. We're also hearing that the Biden administration has told Congress that it plans to cancel some $4.65 billion in debt owed by Ukraine, according to a letter obtained by Bloomberg News. This is just the latest in a series of moves meant to try and bolster support for Kyiv before President-elect Donald Trump takes office. The White House will cancel half of a $9 billion loan that was delivered to Ukraine as part of a $60 billion supplemental package approved in April. And this idea was first floated by Trump during the campaign, was a key tweak to the legislation made by House Republican leaders. So the administration had always signalled a part of it would be forgiven. The letter says that it would help Ukraine prevail in the national interest of the United States and its EU, G7 plus and NATO partners, Paul.
Let's take a look at how Japan assets are tracking at the moment. The Nikkei index off by about 2/3% at the moment. We've heard the news in the past few minutes that NHK, the public broadcaster, is reporting Japan's government is planning to spend or arranging to spend just under 22 trillion yen on its upcoming economic stimulus package. NHK reporting that 13.9 trillion yen of that will come from the government's general account. Combined with private sector spending, the entire package will be worth 39 trillion yen. Still got a very weak yen, by the way, 155 against the greenback at the moment. Well, the head of the Japanese, well, the largest labour union in Japan, is calling for Prime Minister Ishiba's government to accelerate efforts to boost wages. Rengo President Tomoko Yoshino told us exclusively why she's calling for reform of laws affecting smaller companies to allow them to address labour shortages.
One of our reflections this year was to raise the wage level of small and medium-sized businesses, as the gap between large companies and small and medium-sized ones has widened. In order to achieve this, it is necessary to secure the resources to raise wages for small and medium-sized enterprises, so price shifting, including labor cost, will be very important.
We are seeing a lot of volatility in the yen. We are seeing slowing demand from the likes of China, maybe even the United States. How difficult do you expect it to be for these small and medium-sized businesses to be able to have good enough business to be able to hike wages?
As workers, we're in the manufacturing side of the business, and we believe that products should be priced appropriately, so it is very important to ensure that we can sell our products at a fair price. In order to do so, we would like to request that prices, including labor costs, be appropriately passed on to customers. Also, with regard to the exchange rate issue, as the yen depreciates, import prices will rise, so it is very important to seek appropriate prices.
The weak yen has a lot to do with monetary policy from the Bank of Japan. how do you expect the normalization of policy by the central bank to have an impact when it comes to wage negotiations and just the lives of workers?
We would like to decline to comment on that matter, but we're a labor union and we're seeking to enrich the lives of consumers and workers. In that sense, this year, we were able to raise wages to the highest level in 33 years. But since prices have risen even more than that, wages have not been able to keep up. We would like to make sure that this year's wage hikes will be put into a cyclical path for next year and beyond, and that we can realize wage increases in the same way.
Are policymakers, the Japanese government, doing enough to help you achieve those goals, to help the workers?
Last year, we began holding meetings to exchange opinions between government, labor, and management. And since the government, employers, and our labor union are all looking in the same direction toward raising wages, I think in this sense, we share the same challenge in Japan. As for wage increases, our treatment of employee is determined through individual labor management negotiations. However, since the overwhelming majority of companies do not have labor unions, it is difficult for them to negotiate with the company. So we're calling on the government to create an environment in which it is easy to raise wages.
What would you like to see from policymakers in terms of reining in inflation, something that is affecting the workers' livelihoods?
Yes, that's right. We're looking for stable increases in both wages and prices. And since prices are rising considerably, especially for items that consumers need, I think it will be very important to address the issue of high prices. However, it is not that high prices are bad. Our wages just need to rise more than that. Currently, wages in Japan are very low compared to the rest of the world. I think we're at a critical juncture in raising wages.
Renko President Tomoko Yoshino there speaking to Bloomberg's Sherry Ann. More ahead on the Asia trade. This is Bloomberg. Something we've been watching all morning. We're seeing Adani dollar bonds falling as much as 10 cents after the US charges. And we know that one Adani unit sold bonds just hours before the indictment of Gautam Adani by US prosecutors for allegedly participating in a bribery scheme. We saw a unit of the billionaire's conglomerate tapping the US corporate bond market for a $600 million offering that was more than 3 times oversubscribed. And we know that prosecutors in Brooklyn alleged on Wednesday that Adani and others participated in a scheme that involved promising to pay more than $250 million in bribes to Indian government officials to secure solar energy contracts. Adani and other defendants allegedly lied about the plan as they sought to raise money from US investors, according to that indictment. So we did see that Adani unit selling bonds just hours before the indictment, and now Adani dollar bonds following as much as 10 cents after those charges, Paul.
Bitcoin, meanwhile, set a fresh record high. It now has $100,000 in sight, and that's after MicroStrategy said it's adding to its $31 billion stockpile by selling more convertible notes. Well, let's get more now from senior crypto editor Ryan Weeks. So, Ryan, what's driving this latest bump?
Yeah, so we're hovering at about $95,000 for a single Bitcoin at the moment, and as you say, options markets suggest we could get up to $100,000 soon, which is a bit of a psychological milestone for crypto folks. MicroStrategy's adding a lot of momentum at the moment. They've upped the pace of a convertible note selling program by about 50%, and they added, I think, $4.6 billion to their stockpile of over $30 billion on Monday. They've said they plan to buy, I think, over 40 billion over the next 3 years, and that's really adding a lot of momentum to Bitcoin's rally. It's also putting a fair bit of momentum behind MicroStrategy itself. I believe the shares are up over 600% this year, and the market cap of the company is now up over $100 billion.
So much of this is on the premise that, the broader sector, these assets have a direct line to the president-elect and Elon Musk, right? How risky is that proposition, given that we know that Trump himself used to be a crypto skeptic?
Yes, he did, and he had a bit of an about turn on the campaign trail, really won over the industry with promises, including that he would set up a strategic Bitcoin reserve in the US. I think markets have been waiting to see whether or not for signs that he will follow through on some of the promises he made. I think we've seen flickers suggest that he will in the past few days, which is probably also adding to momentum. So he's planning to meet with Coinbase's CEO, Brian Armstrong. There was a recent report that his media company is looking to acquire a digital assets exchange called Bakkt. And then just yesterday, we heard that the White House is considering appointing a kind of a crypto czar to oversee all crypto policy in the US. These are seen as very positive signs by the crypto industry that sort of suggest it wasn't all talk from Trump on the campaign trail.
Senior crypto editor Brian Weeks with the latest as we continue to look at the details, the rollout of that implementation. In the meantime, though, we are, of course, returning to the sort of fallout of those Nvidia numbers and the market reaction that was solidly disappointing despite strong numbers, just not quite meeting these super lofty expectations from investors. We're seeing that right across the board when it comes to S&P futures, continuing to see declines. TAIEX futures looking like we'll see quite a steep drop, and we know that, you know, the expectation was that Taiwan equities really looking to Nvidia earnings to regain some solid momentum. The outflows in November when it comes to Taiwan stocks really increased, geopolitical tensions mounting, and we're looking like a pretty poor session when it comes to trading on the TAIEX today. That is it for the Asia trade. Our markets coverage continues with the start of trading ahead in Hong Kong, Shanghai and Shenzhen. The China show is next.